Hi, this is Scott Murray. Welcome to the Daily Economic Market Shout for Thursday, May 18th, 2023. Great having you with me here today. And today we're going to talk about existing sales. Yes, a disappointment down roughly 3%. We're still struggling with sales. Affordability, still the problem. Mortgages up, prices have moved up consistently over the last several years. And so we're still kind of in that crosshairs, particularly because of inventories. Why is that? Because people aren't putting their houses on the market. They're happy where they are. They've made either a transition before the pandemic or immediately after, and there's very little interest to move on. And I think that's going to be the story that's continued to permeate the business. Problem is, as prices drop, and we've seen drop over $1 million homes are down over 30% in the price, in activity level, and we continue to see prices, struggling with that. And as prices drop, which they did last month, moving down to below in total low 390,000, that's telling you that the purchaser is maybe getting a little better deal, but the problem again is the seller. They're not interested. We saw completions week earlier this week, and then we saw the inventory. Now it is moving up a little bit, over a million, 9% getting there, but we have to get to 1.4 million before we're really in an efficient market. And this is going to be the key element as we move forward, because if we don't have enough supply, prices are going to be problematic and activity will be sluggish because the people aren't willing to chase at this point. Now, some signs, as I mentioned, continually what is working in the housing market is that 250 to 500 level. That activity's only dropped 20%, as I mentioned, more than 30 on the bigger homes. So that's the sweet spot. That's the places where people are moving up and moving down. And I think that's continued to be probably the best place to see some activity in this housing market as we move forward. The West struggling. We've seen employment issues there. We've seen a rise in unemployment claims in California, and not surprising to see how that works through the rest of the economy. South, a little weak in price. It's been up a lot, so we're not surprised to see that work out. But we should also emphasize that the employment market seems to be continually solid. We've seen a little blip up in claims. Those seem to be coming down, again. We saw it move up to almost 250. We're actually watching the non-seasonally adjusted number. Why? Because this is not a usual time period. People are graduating, that we see a lot of claims. And the fact we saw a little bit of a movement up, and some of it was really kind of bizarre, to be honest with you. Massachusetts seeing almost a doubling in individual claims in 1 week, and then of course they fell off, not surprising, in the next week. So there's probably some quirkiness in terms of that. We're watching the non-seasonally adjusted number moving back down to 215, near that 200 level that we're pretty comfortable with, and particularly the continuing claims number moving down to 1.6 million. At that level, it's pretty quick for people to get a job, 8 weeks. So that's a good sign to see that number move down. It kind of moving up a little bit, trying to hit the 1.8 level, a level that we were pretty comfortable at throughout the whole last decade. This time seemed a little more problematic as we got there, but net moving down. Solid housing market, some solid jobs market, meaning the housing market will continue to have some demand. And so again, we get back to the same story again, the supply. If supply can move higher, that will be a release valve, and I think we can get back to normal trading activity. Before then, I think we're going to struggle as price moves around and continuing lethargicness in the purchase area. This is Scott Murray for the Daily Economic Market Shout. Thanks.